Hello, my name is Tom Steyer, and thank you very much for having me here today. If I don't have anything intelligent to say, please blame Drummond for going cross-country skiing with me all those years. And let me say, since Drummond seems really time-conscious, that I intend to be brief. And let me say I'm also proud to be the only person here wearing a tie. As you may know from the literature generated by this conference, I wear a number of hats in the business world, but the views I'm about to share are mine, and they really aren't those of any organization I'm involved with. In fact, I spend a lot of my time with business people who believe that government is largely unnecessary and unhelpful. And since I live in San Francisco, I spend the rest of my time with progressives who think that business people take a lot of money from society without giving any real value back. I believe both those views are wildly outdated, extremely oversimplified, and dangerous. In any case, the relationship between capitalism and government remains unresolved even after 216 years. The two sides have never fully accepted the need for the other, and the press seems sure that both are characterized by venal fools. For years before the New Deal, the surrogate for any real regulation was caveat emptor, buyer beware in Latin. Trust, as a concept in the marketplace, wasn't valued. And the most visually memorable example of that failure was the lines of people waiting to take their deposits out of failed banks and S&Ls in 1932. Does this sound familiar today? That picture didn't reoccur for 76 years because of a government innovation called deposit insurance. At the same time that the government recognized its obligation to regulate the country's capital markets in the New Deal, capitalists discovered how incredibly unfair it was for the government to regulate their unfettered freedom to do whatever they damn well pleased. My grandmother, she's going to be a recurring theme in this, I warn you, told me that in her youth, there was a very common nerve tonic called Lydia Pinkham's, which in those unregulated days was overwhelmingly comprised of alcohol. Now, I know my grandmother didn't soothe her anxiety with anything that wasn't approved by the FDA, or at least the Consumer Protection Agency. But looking at Drummond, I feel highly confident that his grandmother was a regular user of Lydia Pinkham's. On the other hand, we've seen hundreds of examples of a business-government mix where the model is that the government owns the business. My personal favorite, and in my opinion, one doomed to fail from the get-go, was watching the French government's attempt to operate a commercial bank. Although this was never proved in court, it was commonplace knowledge in the marketplace that a $100,000 payment to the loan officer led to a $10 million loan, which is a pretty good investment in bribery. Now, of course, I know not every loan officer stooped to that deal, but what I also know is that the level of corruption we've observed in countries around the world where the government controls the means of production is grim and consistent. We invest all over the world. One of our hugest worries in that is being able to carry out an honest, free trade, and we've had a chance to look at virtually every continent in most countries, and certainly every major country. Ask yourself how many functioning democracies with truly independent judiciaries and the rule of law exist in major oil-producing countries. The answer is that where the government owns all the wealth in society, power is not broadly shared. All of which analysis sounds nice, because it's easy to look back and see that we agree. What's tougher, presumably, is to talk about current examples. So let's take a quick look at Freddie and Fannie, the two government-sponsored mortgage entities that are in the news today. They are New Deal, quasi-public, quasi-private creations designed to provide a bulwark for the mortgage market. A few years ago, the one thing every smart aleck commercial bank in S&L could agree on was that the so-called GSEs, which are the government-sponsored entities, had unfair advantages and were ruining the mortgage market. Now, to be fair, there was something to complain about, but it wasn't that the GSEs were an unnecessary political creation. In fact, as these very same brilliant free market banks and investment banks have blown up their credit ratings and solvency on failed mortgage investments, the only players left standing in the market have been the GSEs. I think they're currently doing about 75% of the mortgages in the United States. So they were and are necessary. The problem with the GSEs isn't that they're unnecessary and unsightly wart on a beautiful capitalist face. It's that the government has bowed too much to the capitalists recently, has been too impressed by loud suspenders and fancy degrees.